On behalf of the Managing Director of the Ghana Stock Exchange, Mr. Ekwafezi, I want to welcome all of you to today's Fast Behind the Figures program. And I'm sure we are all aware that this is a program that has been designed by the Stock Exchange for listed companies to update all stakeholders on their performance, the trends in the market, and then the plans ahead. So today is the 10th of Intravenous Infusions Plc, and we are glad to have their Managing Director, Mr. Mukhtar Swalihu, and his executive team to do the presentation. I'll be introducing the rest of the Intravenous team shortly. But before I do that, I also want to introduce the management team from the side of the Ghana Stock Exchange. So the management team from the Ghana Stock Exchange is led by our MD, Mr. Ekwafezi. We also have the Deputy Managing Director, Ms. Abnamwa. We have the General Manager, Finance, Mr. Frank Bell. We have the Head of Strategy and International Relations, Mrs. Diane Okine. We also have the Head of Ghana Fixed Income Market, Mr. Augustine Simmons. We have the Head of Listing, Mrs. Joyce Wachi. The Head of Trading, Mrs. Harriet Basmusis. We have the Head of IT, Mr. Eric Selassie Adifo. We have the HR and Admin Manager, Mrs. Eileen Naughty, from the side of the exchange. So I will now introduce the team from Intravenous Infusions PLC, which is being led by the Managing Director, Mr. Mukhtar Swalihu. We also have Reverend Kenneth Aja Awude, General Manager for Technicians, Reverend Dr. Eugenia Bule, General Manager for Finance and Administration. We have Mr. Edward Isaka, General Manager for Marketing. We have Mr. Solomon Pulampu, who is the Head of Engineering. We also have Reverend Isaac Musi, Head of Pharmacovigilance. And we also have finally Mr. Samuel Mafu, Head of the Internal Audit. I'll now humbly ask everyone to mute our microphones once we are not speaking. And so at this juncture, I'll hand over to the Managing Director and his team from Intravenous Infusions PLC to take us through the presentation, after which we will have the question and answer session. Then we'll proceed with the rest of the program. So over to you, MD, Mr. Mukhtar Swalihu and his team.
Okay, thank you. Good morning, Jerry. Good morning to Mr. Afezi, Managing Director of Ghana Stock Exchange. Good morning to all participants. On behalf of the Board of Directors and Management of Intravenous Infusions Limited, it is my pleasure to welcome everybody to the program, especially to the fact that this is the first time we are doing this by virtual, using the virtual platform. It is my pleasure to welcome everybody to the program. We'll begin the presentation by looking at the content. So if you can do the sharing for me. All right. So we'll begin by looking at the corporate information that has to do with what we stand for as Intravenous Infusions Limited, who we are, when do we appear in the scene, in the pharmaceutical scene in Ghana. We'll say all of this. We'll also look at the products that we produce as a company. Then we look at the financial highlights, which is the main issue for our discourse today. We'll look at two main periods. We'll look at 2020 financial year, and then we'll also look at 2021 half year. Then after that, we take a look at what our outlook is going into the future. Then from there, we'll take questions and answers, and the other information, which is our contact information, will be the next one. So, next sheet, please. Ladies and gentlemen, Intravenous Infusions Limited was incorporated in 1969 and started production in 1974. It also, got listed as a public company in 2015, December. in the second tier of the Ghana Stock Exchange, known as Ghana Alternative Market. The company was the first pharmaceutical company to produce infusions in Ghana and West African sub-region. And our main principal, as we mentioned, activity is for the production and distribution of intravenous infusions therapeutic purposes. Our company is located in Kufridua. That is where we have the main factory. Then we have about 5 distribution outlets in Ghana. You can get our office in Accra. We have the head office in Kufridua here, where we also distribute from here. That take care of Kufridua and Volta region. Then we have Kumasi taking care of Ashanti and BA regions. Then we have Takoradi, that is Western Central, where our office is located in Takoradi. And Tamale take care of the 3 or the 5 northern regions. Our company has played a major role as a strategic partner with the Ministry of Health over the years, because we distribute our products to the ministry through their agencies, the Ministry of Health through the Regional Health Directorate. We also do so through the hospitals, owned by the Ministry of Health and Ghana Health Service. We also sell our products to other institutions like the police hospital, the mission hospitals across the country, and all the other hospitals that are in need of infusions. We sell to everybody in the country. Ladies and gentlemen, our products are categorized into the traditional products are made up of 3. We have the infusions, which is the large volume parenterals. Under that, we have solutions such as dextrose solution, we have dextrose saline solution, we have sodium chloride solution, we have polysilane lactate solution, we have polysaline dextrose solution, and we have special solutions. All of these solutions are back into different volume sizes. We have them in 100 mils, we have some in 250 mils, we have some in 500 mils, and we have 1,000 mils. The next category of product that we produce is administrative cells, which is made up of infusion-giving cells, blood-giving cells. Then we have the small volume injectables, also referred to as SVPs, that's small volume parenterals. Under this category, we produce and distribute magnesium sulfate 50% injection, magnesium sulfate 20% injection, petadine injection, quinine 600 injection, and quinine 300 injection. So these are the categories of SBIs that we currently produce. Ladies and gentlemen, in 2020, we have added new products to the line. As a result of the COVID, we are into production of hand sanitizers. We also produce and distribute rubbing alcohol, and we also produce methylated spirits as well as part of additions to the product lines. Ladies and gentlemen, we come to the financial highlights and review. It is very important for management to bring attention to shareholders and investors about some of the major things that occur in the year 2020 in review. As we are all aware, in 2020, we all wake up to realize that we are faced with a COVID-19 disease, a virus, that has actually affected all spheres of our national economy. Intravenous had our own share of that pandemic. What the pandemic did to us was that we had a situation where our infusions, which is the core of our business, we lost a lot of, there was a reduction in demand for the infusions. And this was occasioned as a result of the reduction in the level of attendance by patients to the hospitals, and the OPDs were recording very low attendances. We also have a situation where the major hospitals across the country were not actually carrying out what we call non-critical surgeries, in which most of the time they use infusions as part of the drugs that they use in carrying out the surgeries. So because they suspended this in anticipation of getting themselves prepared for the emergency, the COVID-19, we have a situation where the demand for infusions and related products dropped, considerably. Now, ladies and gentlemen, despite the negative effect that COVID-19 brought to us, we also look at it and see how we can take advantage of the situation. And that is when we went into the production, distribution of hand sanitizers. Now we are also doing hand washing soap and the methylated spirit as well as the rubbing alcohol. Ladies and gentlemen, in 2020, as part of our corporate social responsibility activities, we donated infusions to Noguchi Memorial Institute as a way to support the testing of the COVID virus, and this was done in November 2020. Ladies and gentlemen, as reported in our AGM the last time, we are currently undergoing a retooling of our factory through an acquisition of plant and machinery and their installations. And this, we got the support from EcoBank Ghana Limited under the Government of Ghana stimulus package. Okay, ladies and gentlemen, these are the other part of the major events that occur in 2020 had to do with the fact that management were able to put in cost reduction measures, and as a result, we were able to have a reduction in admin and selling expenses going down by 9.7%. All right. Now, let's look at the key financial highlights, especially relating to 2020. Revenue for 2020 was 20.69, ladies and gentlemen, and they represent a decline of about 10.47% year on year. Now, our gross margin, our gross profit, which was 11.91 million, ladies and gentlemen, represent a decline about 12.86 year on year. Net profit of 1.4 million also declined by 22.44%. Our net shareholders fund, grew by 1.38. Return on capital, 8.09, represent a 23.46% year-on-year decline. Total assets, ladies and gentlemen, grew by 22.52 year-on-year. Earnings per share, ladies and gentlemen, was 0.53, representing 27.40% decline. Return on assets was 3.89, representing 36.65% decline. Dividend also declined by 29.27%. Ladies and gentlemen, we would like to take a look at a trend analysis, the 5-year audited financial figures, to see where we started from immediately after the listing and where we are now. In the area of revenue, from 2015 to 2016 grew by 40.7%. 2017, it went up to 54.5%. 2018, 23.4%. 2019, 14.25%. In 2020, we experienced a decline by 10.47%. And this, as I explained, is principally as a result of the effect of the COVID, because we couldn't move the required volumes during the period. Our gross profits, started climbing up as a result of the increase in revenues that we have achieved over the last 5 years. In 2016, we had 5.3 million gross profit. 2017, it came to 10 million. 2018, 11.9 million. We had a dip in 2019, 11.6 million. Then we had another dip in 10.18 million in 2020. Now, if we look at the gross margins, in 2016, we were 50.2. As a result of very good prices that we had in 2017, 2018, it climbed to 61.5%. Then it started declining 58.9%. It went to 50.62%. Now we are at 49.27%. Ladies and gentlemen, the decline is occasioned as a result of increased competition in the marketplace. We now have a lot more people going into the infusion space, and as a result, we have the prices that come, declining. Our earnings before interest and tax has also seen some growth, and we started declining again from 2018 to 2020. Net profits in 2016 was 0.67% million, 2.7 million in 2017, 2.8 million in 2018, 1.8 million in 2019, and 1.4 million in 2020. And then the margins that we got from them, we started, as increasing from 2016 to 2018, we grew from 6.3 to 14.1, and then we have now declined to 7% in 2020. Now, when we take a look at our assets and the level of assets that we have accumulated over the period, our total assets grew from 12.3 million in 2016 to about 37.33 million in 2020. This is as a result of the continuous investments the company is making in creating the condition for proper utilization of the company assets. At the same time, our total liability also grew from 5.1 to 19.3 million in 2020, because we have actually financed most of these assets through loans that we acquired from the banks. So, ladies and gentlemen, we have the ratios, the various ratios, return on equity from 9.3, now we're at 8.09. Then equity to total assets, about 0.58 times. In 2016, we are still at 0.48 times. Total liability and total equity, 0.71 times. We are now at 1.08 times. And we also have total liability, total assets, 0.42 times. It has now grown up to 0.52 times because of the increase in the borrowing. Ladies and gentlemen, we now come to the 2020 financial year in review, the detailed. We have revenues recorded as 20.668 million, compared with 2019, 23 million. Ladies and gentlemen, we recorded a decline by 10.47%. As mentioned earlier in the review of 2020, significant issues, we mentioned in particular that the COVID-19 has actually affected the volumes of the infusions that we sell in the market. Now, somebody may ask, but if it is a virus and it's a disease, is it not something that you should rather be actually taking advantage of to make more money for shareholders? Yes, that was the anticipation. But unfortunately, because the pandemic is spread through crowding, and our hospitals are also areas where the crowding occurs, a number of our people were afraid to go to hospitals when to seek medication. So they rather prefer to go to the high street pharmacies to get medication rather than going to hospitals. So during the period of the pandemic, the heat of the pandemic, ladies and gentlemen, we have some facilities where their OPD attendance drop as low as 42% of their normal capacity. At the same time, our 4 major teaching hospitals in the country were actually suspended non-critical surgeries, and because of that, infusions usage in the hospital also dropped. So these are the factors that are accounting for the drop in revenue, aside of the fact that we also have marginal drops in prices. Please bring it back. Ladies and gentlemen, we have gross profits, recorded 10.18 as again 11.68, as mentioned earlier in the trend analysis. Operating and other expenses, which is made up of administration overheads and marketing overheads, in 2020 was 7.8 million, in 2019 was 8.6 million. Ladies and gentlemen, this is an area that we have made a significant reduction in the operations that actually occasion our ability to post good profit. We have been able to reduce overheads by 9.76% during the period year on year. Depreciation and amortization also went up by 43.88%. Profit before finance costs and tax went up by dropped from 2.5 to 1.6 million, representing 33.8% drop. Finance costs also increased by 27.0%, 0.7%, ladies and gentlemen, bringing the profit before tax from dropping from 2.3 million to 1.3 million, representing 40.75%. Ladies and gentlemen, income tax expense, improve largely, from 429,887% to a positive of 87907%. So profit for the year, 1.450% million from 1.87 million, representing 22.44 declined. Ladies and gentlemen, our balance sheet representing our total assets and total liability and equity, we can see clearly that total assets grew by 22.52% from 30.47 million to 37.33 million. Then our stated capital, or the total capital and reserve, also increased by 1.38%. Sorry. Non-current liability grew by 98.11%. This is as a result of the loan that we have taken from Ecobank Ghana Limited for the current retooling exercise that we are undergoing. Current liabilities increased from 7.85 million to 10.8 million, representing 38.37%. So the total equity and liabilities put together also grew by 22.52%. Ladies and gentlemen, this presentation, as mentioned in the in the content, we mentioned that the financial highlights will cover 2020 audited financial statement, and at the same time, we'll take the opportunity to present where we are at half year 2021. So 2021 half year financial review income statement is what we have now. Ladies and gentlemen, by June 30th, 2021, we recorded revenue of 11.5 million compared with 8 million that we did in 2020, representing 44%. Cost of operation grew up by 28%. Our gross profit, which was originally 4.1 as at June 2020, is now 6.541, representing 59% increase. Other income, which represents other things that we do that generate income, which are not traditional to our business, we have grown it by 104%, ladies and gentlemen. Operating and other expenses grew by 16%, from 3.3 to 3.8 million. Then depreciation and amortization grew by 27%, from 280,000 to 356,000. Profit before finance costs and tax grew by over 300%, from 529 to 2.37 million. Finance costs also went up by 81% year on year, from 94,000 to 170,000. Profit before tax, ladies and gentlemen, grew by over 400, from 434,000 to 2.2 million. Then income tax also followed the same, and then profit for the year after tax also went up from 353,000 to 1.7 million. Ladies and gentlemen, this is where we are as at half year, and the trend, ladies and gentlemen, has continued. Now, let's look at the outlook. What are we looking at from now and 2021 and beyond? Ladies and gentlemen, it is a view of management that in 2 years' time, we should be doubling the revenues from 20.7 million, as we have it now, to about 39.8 million in the next 2 years. Then we also hope to introduce at minimum 6 new products in the next 18 months. Ladies and gentlemen, we'll continue our collaboration with KNUST for the product development. Currently, we have paracetamol IV. It is the expectation of management that we will increase revenue and increase turnover, from current 20.7 million to 39.8 million in the next 2 years. We also intend to introduce at minimum 6 new products in the next 18 months. We also have to continue our collaboration with KNUST in our product development effort. And as mentioned, we currently have paracetamol IV, which has gone at an advanced stage in terms of development and registration at the FDA. Construction of ultramodern factory, it is something that we are currently looking at, and we hope to re-establish our West African market presence. We have done business in La Côte d'Ivoire, Ivory Coast, La Côte d'Ivoire, Burkina Faso, Togo, and Benin. We have now currently making effort to get some of the products registered in those countries and also appoint agents who can drive our business interests. Ladies and gentlemen, it is expectation that we will look at increasing our market share from the current level it is to 60% in the next 2 years. Ladies and gentlemen, we also wish to collaborate with government to address certain funding challenges of the national insurance. We define our cash flows. We also look at the installation of newly acquired plants and machinery, and also appeal to government to support the local production of infusions instead of importation. Ladies and gentlemen, I wish to end here and take the opportunity to thank the shareholders and all participants for listening to management of Intravenous Infusions Limited. I'll stop here and take some questions.
Okay, so thank you very much, Mr. Swalihu, for that elaborate presentation. So the floor is now open for questions. You can put your questions in the Q&A box or the chat box, or you can raise your hands and then I will call you and then you can speak. Okay, so that's how it's going to run. So we have the first question from Mr. Eric Edifo from the exchange. He mentioned that they took a loan from EcoBank to help with their operations. I want to ask, was there a cost-benefit analysis prior to that decision to take the loan? And was there any consideration to pursue the option of additional listing to raise more funds, considering that could have been a cheaper option than a bank loan? What was the drive for using a bank loan? So this is the first question from Mr. Eric Edifo to you, Mr. Swalihu, and your team.
All right. Okay, Cosme. Thank you, Jerry. Can I take the question or we should take more questions?
No, let's take this one as more questions have been put in the chat box.
All right, thank you very much. The loan that we took from EcoBank is under the government of Ghana stimulus package. I think that the incentive there is the cost of the borrowing is shared between Intravenous Infusions Limited and the government of Ghana. I think that's the arrangement. So if the interest rate is 20%, it means Intravenous will take 10% and government of Ghana will take 10%. That is the arrangement. So in terms of cost-benefit analysis, we say that to borrow Ghana at, and your cost is at 10%, because you have been subsidized by another 10%, then it's good money to take to do your investments. Yes, it's true that we should have actually looked at the option of coming to the market to raise further funds. If you remember, after our initial listing in 2015, in 2017, we came back to the market to do private placement for further investments, even though we weren't able to raise all the money that we needed. So that is why we have to look at the option of using some of the banks to be able to address some of the structural challenges in the company. So in the opinion of management, given the fact that we are borrowing at 10% CD, then that could be very good funds for investment. And of course, once we are not opening up the space in terms of equity, it means we are able to keep the existing shareholders' interest in the company, because the more you borrow on debt and you can use it properly, then it leads to increase in returns to shareholders. So in our view, this arrangement with EcoBank is the best for the company, at least for now. We may look at in future probably raising future funds in the market, probably to refinance some of the level of exposures that we have with them. Thank you very much.
Thank you, Mr. Shiley. So we'll now wait for more questions. So if you have a question, You can raise your hand or put it in the chat box or the Q&A box.
Hello, can you hear me?
Yes.
Hello?
Yes, we can hear you.
Can you hear me? Yes.
Yes.
Okay.
Yes, we can hear you.
Okay, thanks. This is Kadiri Maxwell. This is Kadiri Maxwell. I'm joining this from Abuja in Nigeria. Thank you for the opportunity. Just a quick one. I think I beg to disagree with the managing director. And I say this advisedly because I was a beneficiary of your private placement in 2015 or 2016. And then you also had another private placement. And I am aware that there were opportunities for other investors to invest significantly on that private placement, and was part of a team that visited your plant and had conversations with your management team at the time. Then there was a different managing director. And part of the point that we flagged was the fact that the amount of money you were looking for in the second private placement was too small vis-a-vis what the ambitions were. And there was a sense that the investors who were keen to participate in that private placement wanted to put in significant amounts of money to be able to meet the point you just raised in terms of your projection of expanding to West African markets, including Nigeria. But that offer was spawned by your core investors at the time. So, and here we are. You are now having to borrow money from the EcoBank Ghana at even if it's at 10% interest. If you could have gotten the money that you needed at that time in terms of expanding the scope of the private placement, you would have been in a much better position than you are now. So I align myself with the question asked by the previous questioner of basically saying it certainly would be much better to have gotten money or to get money from your existing investors and new investors than basically taking a loan from a bank, even under concessionary interest rates, because then you don't have to worry about the interest rate element. So given the fact now that you're also looking at further expansion, what is the thinking in terms of either raising new equity or getting new investors to come in? I know the concern with your core investor is that dilutes their holding and dilutes their control, but again, that also expands the thinking and brings fresh ideas into the business. So what's the thinking of that? And I want us to have a very frank conversation here. My apologies. Thank you.
All right. Thank you very much. First of all, I don't think the board and management has closed the chapter for further raising of funds from the market. I think that option is still available. That can be used, probably be used going into the future. Like I mentioned, the more you borrow, more shareholders and their risks go up, because you have to borrow on the strength of your balance sheet. So in terms of going forward, yes, it's part of our thinking that at a point, the company may come back to existing shareholders and at the same time, potential shareholders to probably raise future funds to, reduce the level of exposure of the loans that we have. So we haven't at all closed the chapter for raising of equity from the market. It's an option that is still open that the board may look at, and then a decision will be taken. But I can remember your company in the private placement making a formal bid, because this was handled by some consultants. It wasn't a company that was actually raising the funds directly from the market. We use companies to do that. So we didn't actually get a formal bid. Maybe there might be discussions of your interest in the company, but certainly I was there in the company at the time and I can't remember. But whatever it is, the door is still open for...
If I may weigh in quickly, we even did a site visit, and it was a 5-6 man delegation, including the investment house that was also handling the private placement on your behalf.
Yes.
And then had meetings with your predecessor. And I imagine that you were also there when we did the visit. My name still remains Kadiri Maxwell. We came from Accra all the way to Kuforidoa and spend the greater part of the day inspecting your factory.
Okay.
And the crux of the conversation was you were looking for, I think, about $3 million, and then equivalent at the time. And the crux of the matter was the investors were saying that is small, and what they were trying to do was to build synergies between their operations in Nigeria and their operations in Ghana, because as you would know, export from Nigeria is a big challenge because of the bottlenecks that are. So the thinking was investing in your private placement on an expanded scale creates a foothold for expansion to the rest of West Africa, since the system in the context of Ghana was more stable and much more proactive. But it was surprising that was spawned. And I mean, I don't want to go into all of the details here, but I'm just putting that back on the table as possibly an opportunity missed and wondering whether we can do things better going forward. Because now it's also obvious that you need more money, which is why you took the loan from EcoBank Ghana, and which would have been avoidable if you actually increased what you wanted at the time.
Okay. Thank you. Thank you very much. We've taken note of that, please, sir.
Okay, thank you, Marcel. Okay, so we have a couple more questions in the box. So there's a question from Godwin Kojo Odu. He's asking, how have you spent the funds that you raised during the last private placement? So that is one. I'll add a few more so that you can answer all once you get them. So the first one is, how have they spent the funds they raised during the last private placement? Then the second one is, how have they met the targets they set for themselves during the private placement, including their expansion to the key markets in the West African sub-region, including Nigeria, Cote d'Ivoire, Liberia, and Sierra Leone, among others. So you can take these two questions and then we'll continue with the rest.
Oh, okay. I'll take the first one. How we utilize the funds that came from the public placement. Is it a private placement or the public placement? The public offer. Hello, Jerry. Hello.
Hello. Yes, Mr. Aliu. Yes.
Okay. With respect to the initial public offering, yes, I think that the prospectus stated clearly how we were to apply or utilize the funds if we raise all the money that we require. And even if you don't raise all, there was a need to prioritize the key, applications that were very important to the interest of the company at the time. We set ourselves up to raise about 12.3 million Ghana cedis at the time, but we ended up by realizing about 6.8 million. So we were not able to raise all the money that we needed from the initial public offering. Because of that, there were key things that we needed to do that included both capital and non-capital costs. The non-capital costs, one of the items that were there was a refinancing of a debenture that we signed on to from the US. And the debenture funds were actually used to acquire 2 major filling machines, whose value at the time was about $500,000. And we needed, because the debenture had actually, the period for the repayment, we got to the period of repayment and we needed to pay the funds back. So from the wisdom of the directors, they felt that, look, let's pay this money because after all, we have bought a new machine with it, which is currently being installed. Part of the funds were also used to complete a new area that we started. Because as we go along and there are changes and you need to be upgrading the systems and the equipment, as well as also making sure that your quality management systems are in compliance with what is required by the FDA. So at any one point in time, your clean room system will have to be looked at in the context of the new requirement. So we had to spend part of the money to complete that area, to make the area available for production, which we did. Then we also used part of it to show up our working capital, because that's what we did. And then we also, part of the funds was also used to address our short-term liabilities, which we needed to free up and continue to trade with our suppliers. What we didn't do from the IPO, because we didn't raise all the money, has to do with the fact that we were able to actually acquire some equipment that we are now currently, buying. Because at the time we needed to acquire certain, critical equipment, also to come on board. But because we couldn't raise it, we had to actually suspend that one and deal with this, disbursements as I outlined. So this is how we utilize the funds from the initial public offering. Thank you.
Okay. So, Mr. Swali, there's another question here. Aside the introduction of 8 new products, can you shed some light on where the company will be in the next 5 years? This is a question from Kofi Osuansan from the Stock Exchange.
Thank you very much. In the next 5 years, I think in 2020, December, the current management presented a strategic plan for 5 years to the board. And in the strategic plan, the idea is that we need to grow the existing revenues of the business from the current level to at least in the next 5 years getting to maybe close to $100 million US. So the question then here is that how do we get to that level? Because the existing business that we are doing, we are getting competition in the marketplace now. So we notice that, look, there's other opportunities that exist in the other spheres of the pharmaceutical business, because we have carved infusions as an area where we are specializing on. But we have people now going into infusions. So it means that we also have to leave that space and go into other areas. So as a result, management presented about 60 different products to the board, of which we have to roll out in the next 5 years so that we can achieve this revenue level of growth. And so far in 2020, we have had a strategic collaboration with a company from India. And at the moment, we are thinking about looking at about 44 products, but we may not be able to roll out 44 products this year. But we'll pick some and roll them out. The good news here is that there are products that have been registered by the FDA, so we are currently just putting in place the infrastructure and the necessary tools to get the business start running. So we are, from our side, or from our perspective as management, we can only grow this business by actually diversifying strongly to other areas. And not only in terms of the pharmaceutical space, we are also looking into other things as we have started the production of methylated spirit, rubbing alcohol, and all those consumables, in the medical consumables, because that space also has some revenues that can be tapped from. So this is how the current management we are seeing this company getting into in the next 5 years. We are hoping to grow the revenue, because the only way you can continue to assure revenues, assure shareholders of returns of their investment, is to continue to grow the top line. And that is the focus of the current management.
Okay, thank you. So there's a question from Maurice Ogbete. He said he didn't hear you mention Nigeria in the list of West African countries that you deal with. And what is the reason why Nigeria was not in the list? Thank you.
All right. Thank you very much. Historically, this company has done business with some states in Nigeria before. I remember in 2015, an effort was made to get some of our IVs registered in Nigeria. But I think we had a lot of challenges in going through. We appointed a consultant there to take us through the process of how we can get the product registered. Because for medical products, you have to first of all register with the FDA of the country for them to agree for you to start sending your products there. But it was difficult. And I think that the reason was that I think Nigeria has their own way of how they look at some of these things. Infusions was part of their own lists that are not required to be imported into Nigeria. So if you want to do business in any of the states in Nigeria, then obviously you have to think about setting up the plant, an IV plant in Nigeria. So for now, given where we are now, we are trying to strengthen our existing equipment in Ghana here to take care of Ghana and the other sub-regional market where importation is not a problem to them. That is the starting point. But going into the future, our target is to go to Nigeria and have an IV plant in Nigeria. It is something that is part of our dreams. But in the next 5 years, it is not within the next 5 years, not at all.
Thank you. There's a question from Joshua Amlan of the BNFT. Can we have some more details on the 6 products to be introduced in the next 18 months?
I don't know whether we can bring it out, in this program, but the 6 products that we are talking about, they are not infusions related. They are tablets, they are syrups, and some of them are injectables, small volume injectables as well. So these are the areas of categories where we are going to pick and then introduce.
Okay. There's also a question from Godwin Kojo Odun that what was responsible for the astronomical increase in the PBT and the PAT? That is the profit before tax and the profit after tax.
Which period is it referring to? Is it 2020 or 2021 half year?
He was not specific, but I'm sure you can talk about the 2021, which is more correct.
Thank you very much. What it means is the top line, which is the revenues, has increased by 44%. And what this simple tells us is that the COVID, which had an effect on us last year, the effect of it is dying down gradually. Because what we saw after June, July coming, and August from 2020, we noticed that most of the hospital normalization started coming back to most of our hospitals. So initially, during the peak of the pandemic, like I mentioned, we traveled around the country, and what we noticed was a number of the hospitals, were operating at 42% of their normal capacity. So the intake of patients were not as high as it used to be. So that accounted for that. Now the normalcy has restored. In other words, people are now visiting the hospitals as and when they fall sick. So the demand for the infusions have started going up again. And it is what is manifesting in the performance for the half year. Because if you look at the half year, infusions in terms by 36.53%. And then we also have a price drop about 6.33%. So this just clearly explains that the whole revenue driver, the driver of the revenue at the top there, has to do more with volume than price appreciation. So because of that, it has the trickle down effect of that. What it means is we've grown revenues by 44%, then your gross profit is also going to get better. And then if you keep your expenses and admin expenses and marketing expenses under control, then you have that one trickling down to earnings before interest and tax in that order. So the performance is simply just shows that. And you see, we are running a factory where we have the fixed costs and we have the variable costs. This company, most of the costs are fixed. A greater portion of the admin costs are fixed costs. Okay, so if we are able to get to a particular level of covering those costs, further additions of sales that you make only add a lot more to profit than before. So that explains why 44% increase in revenue can translate to that level of increases in profit that we have in half year 2021.
Okay, thank you. There's a question from Maxwell Kadiri. He said, in the light of the company's plan to expand and diversify its operations, are you also considering moving from the gas market, that's the Ghana TV market, to the main board of the GNC? If yes, can you estimate when this could possibly happen? Thank you.
Thank you very much. Yes, it is something that the board is looking at. But for now, we haven't had any firm discussion about that. Now, what we are looking at is what advantages do we get by being in the main markets and by being where we are now. We need to look at the two very well. I think that one of the concerns that we had in the past has to do with the fact that we were thinking that the GACS is not giving us the level of exposure to certain key investors. Because every investor has his criteria of shortlisting, the kind of companies that he would like to, see or deal with. So if you are not within the shortlist, he may not know what you are doing, So it is a discussion that management will be taking out with the board. Of course, if we are going to go to the board, we have to go with justification. Why we think that we need to move from the GACS to the main market. So it is something that we need to look at because it will give us more prominence in the market space to allow other investors to look at our story.
Okay, thank you.
We don't have a date yet anyway. Yeah.
Thank you. So there's another question. There's a question from Godwin. He said, what pharmaceutical business areas should the company be considering pivoting into, given the changes brought about by COVID and beyond just hand sanitizers and the hand washing soap? Thank you.
Yes, thank you very much. Currently, the COVID vaccine is a discussion that is currently ongoing, in the space, in the pharmaceutical space. Government is determined to get companies to go into the production of the vaccine, and vaccine manufacturing is a very complex process. At the moment, the discussion with the government, companies, through the Ghana Pharmaceutical Manufacturers Association, have expressed interest to go into the production of the vaccine. And Intravenous will also have that interest to really look at what is going on and put it within our strategic framework. So we will be looking at the vaccine area as well, but we are yet to look at exactly what is there. We are yet to have a discussion with the government to see how we can come in, because we have a very good background. If you look at how vaccines they are injections or they are injectables. And we have been doing the injectable production, almost about 50 years, getting to 50 years now. So we have the experience, and we know what it requires to be able to do that. So we have to have discussion. We plan having discussion with the government, but we have already expressed our interest in going into that space. Apart from the vaccine, obviously, the main area that we are looking at is the tablets, the syrups, and all the other pharmaceutical areas, because currently we are into infusions, and infusion is just a subsector of the entire pharmaceutical business in Ghana. There are a number of products that we are not dealing in. So, as I mentioned, in one of the questions that you asked, we have currently, have a registration of about 44 products in partnership with a company in India that we will be venturing into, because we feel that the future of this company is not only in the area of infusions, because infusions, we are being attacked from that space. So we need to also go out of that space to begin looking at other opportunities for the company. So the areas that we'll be going into is tablets, we'll go into syrups, we'll go into ointment, and I'll also go into some injectables as well.
Thank you.
Okay.
Yeah, Mr. Swale, you are still on the line.
Yes, I'm there, please.
Yes. Okay. So I think we are just about wrapping up the question and answer session. So there's a question here that says on the production of the vaccines. This is from Maxwell Kadiri. On the production of the vaccines, given the challenges of intellectual property rights, which the main producers in the global market are not ready to share with the rest of the world, can you also not look at being a vaccine refilling plant, like it is currently being done in South Africa presently? Thank you.
Yes, thank you very much. I think that these are some of the technical details that the Presidential Committee on the Vaccine Production they are looking at. Because no company, pharmaceutical company in Ghana now has that know-how to do the vaccine. So if you have to do it, it means you must have the patent or the right to do it, the right to do it. So that is why we have said that these are some of the details that the government is looking at with the Pharmaceutical Manufacturers Association of Ghana. How do we address the issue of patents? Because we cannot go through the whole cycle of research to come out with our own vaccine. It's going to be very expensive. But if somebody has already done it and is prepared to share the knowledge with us so that we can use it to produce, that will be very important. And I think that a single company, may not be able to do that. That will be too expensive for it. So that is why I think government is coming on board to see how all of these patent issues can be addressed. And I think that if it's made available to government, then government will be in a position to share it with every company that wish to go into the production. So these fine details are still on the table being discussed. And I think that, as mentioned by the chairman of the Presidential Committee in one of the news releases, that they are looking at the production within the next 2 years and beyond. So all these technical details will be fine-tuned, and every company will know if you are going into it, will you get a patent to do the production? Will the government be prepared to come in and make this available to companies to produce? So these are among all other challenges that need to be looked at before we can talk about the real production.
Okay, thank you. So I think we'll take the last question from Godwin Odom. He's asking, should a company not be much more ambitious in its business and growth outlook than it has been hitherto?
Yes, that's true. And I think what we have put out there, especially growing the revenue from 20.7 million to 39.8 million within the next 2 years, I think is a very, very ambitious outlook. Because we are talking about almost doubling the revenues within 2 years. So the question then is, what different are you going to bring? What additions are you going to bring on board? Because your existing business, there's competition there already, and we are hoping to how we can up the competition using the strength of our goodwill. Also, we mentioned that in the next 5 years, these revenues at this low level, we hope to bring it to the level of 100 million in the next 5 years. So I think these are very, very ambitious and bold outlooks that, from our side as management, because it means that if you are 20 point something and you are going to go to 100, I mean, you are more or less growing by almost 100% every year. And the reason why we feel that it's possible is we are not going to achieve this growth not only from the existing business that we are doing. We are looking at bringing in on board new business. Thank you.
Thank you. I think our time is up. If you have any more questions, you can always send it to marketing@gsc.com.gh, and then we'll relay this to the listed company, and I'm sure we'll get back to you. So thank you very much, Mr. Swalihu and your team, for responding to all the questions and the concerns from the public, all the various stakeholders. We are indeed grateful for your time. At this point, I want to once again acknowledge all the people who have joined us on this call, the fund managers, pension fund managers, our friends from the banking and insurance fraternity. We have chartered trustees, we have the investing public, we have the media and all the other stakeholders. Thank you very much once again for your time. We'll now go.
Jerry, just a
Yeah.
moment. I think Moneyman is ready to engage any fund manager, any investor who would like to have an engagement with us. We are available.
Yes, we are happy to hear that. And some of them are on this call. So I'm sure they've heard it and they will be able to contact you after this program. Thank you. We'll now take some closing remarks from the Managing Director of the Ghana Stock Exchange, Mr. Eko Afezi. So over to you, Mr. Afezi.
Good morning to Mr. Mukhtar and the entire management team of Intravenous. I hope, Jerry, you can hear me.
Yes.
Yeah,
Okay.
Good morning.
Okay, so good morning to Mr. Mukhtar and the team. Good to see you again after such a long time. Hopefully.
Yes. Mr. Afezi, good morning.
Good morning. Hopefully, when the COVID is over, when the time comes for us to be able to meet physically, we'll surely meet you again. But first of all, let me just say a big thank you to you and your team for the excellent presentation and also the excellent answers you're giving to all the questions that have been asked. Let me also say that that's one of the few occasions, that is when it comes to far behind figures that we've had, the company talking about its outlook in figures. Most of the time, when we ask companies to talk about their outlook, they actually refuse to do that. But investments is about the future. And that is why it's important to always talk about the outlook. So thank you for that. And we hope you keep on doing that, assuring investors of what the outlook is going to look like. That is very, very important. Let me say, Intravenous listed in 2015. Indeed, it is a flagship on the gas, that is the Ghana alternative market. It is a flagship because it is the company that has raised the most capital in terms of the gas companies. Then also, it's the most actively traded on the gas. And we must commend you for the very bold initiative as a Ghanaian company, taking advantage of the opportunities offered by the Ghana Stock Exchange to list on the market and raise capital. Indeed, that is what we expect other Ghanaian companies to do, to utilize the market to raise long-term capital, either by floating shares or by using the market to raise long-term debt instruments. So nothing stops Intravenous from going through the market to also issue bonds, corporate bonds, in addition to the equities that you have. And those are the services that we provide now. We provide a diversity of products from the shares to the bonds on the market. And in no time, we'll be introducing other products such as green bonds and derivatives, etc., into the future. So far, we've had companies raising over 5.2 billion cedis through equities on this market for the past 30 years. And within the short space of 6 years, we've had companies raising about 12 billion through the issuance of bonds. So the bond market is quite active, and investors in Ghana like to invest in fixed income instruments. So companies in Ghana can utilize both markets to be able to raise capital. I'm hammering on this because of the fact that it's important that as a Ghanaian company or Ghanaian companies generally, they should be looking at raising long-term capital to fund their expansion projects instead of using short-term loans. And that was why questions were coming at you. Why did you go and borrow and all that? But then as companies, you can combine all kinds of financing arrangements to achieve your goal. So I will take this opportunity to urge Ghanaian companies to seriously think about how to raise long-term capital. And then you do it by way of floating shares or by way of borrowing through the bond market. Let me say the market is currently doing very well. The index has gone up by 44%. This is the highest since 2018, 44%, and it's still about one of the best markets in Africa. We've seen values increasing by over 50% as compared to last year. And when you take the bond market, we've traded over 140 billion cedis already, as compared to 108 billion of the entire 2020. So indeed, the market has picked up, and I urge entrepreneurs, businessmen, and also potential investors to take a second look at the opportunities offered by the Ghana Stock Exchange in order to either invest or raise capital in order to achieve their objectives. Let me once again thank Mukhtar and your team very much for the presentation, and all those who attended this program. It has been very interesting, and we hope to see you very soon again. And thank you, and have a very good day. Thank you.
Thank you, sir. Thank you. Thank you.
So thank you very much, and thanks to everyone for having this invitation. We'll now close with a prayer from Reverend Dr. Eugenia Gully, who is the General Manager, Finance and Administration. Thank you.
Shall we pray? The Alpha, the Omega, the beginning and the end. We are grateful to you once again for bringing us to a very successful end. As management, we are asking for your graceful guidance as we grow this company beyond the shores of Ghana. Grant us as a company a global presence. Bless everyone watching us right now. Bless all stakeholders of Intravenous Infusions Plc. And bless this your company. In Jesus' mighty name we pray. Amen.
Amen. Thank you very much. So once again, on behalf of the Ghana Stock Exchange and Intravenous Infusions Plc, I want to thank everyone for making time to attend this Fact Behind the Figures program. We are indeed grateful for your time, and we hope to see you again very soon. So thank you very much, and enjoy the rest of your day. Bye-bye to all.
Thank you.
Thank you.
Bye-bye.
Bye.
Yeah.